Nolan, good to see you. The Dow and the S&P hit new record highs, but how long will this rally last? The S&P recently crossed a January 2022 peak, fueled by investor optimism and signals from the Fed that we may finally start to see lower interest rates. In the third quarter of 2023, the market experienced a record downturn. Now we're seeing these record highs. What's going on?
Yeah, Erin, a lot of this volatility that we're seeing right now, I feel like is just a residual response to a lot of the stimulus efforts that were issued a couple years ago during the pandemic, and then the subsequent actions by the Fed in raising rates so much in 2022. So 2023 was a pretty good year overall, but like you said, had a pretty bad third quarter. That was unexpected volatility, some currency disruptions. Last year was primarily propelled by the tech sector individually. So you have some concentration risk. There's a whole lot of different things contributing to this volatility right now. Sometimes volatility can be good. I think it's been good the past 10 or 15 years, but sometimes it can be bad. Early 2000s to the early 2010s, for example. So, this is volatility, record highs, record lows. We're kind of seeing them on an ongoing basis. And I think we will around the election as well.
Right. So we have to talk through consumer sentiment, which surged 29% since November. That's the biggest 2-month increase since 91. Are investors starting to believe what the experts have been saying, that the economy is actually doing well?
I think this indicates that investors are starting to believe what experts have been saying, but usually individual investor sentiment is a contrarian indicator, meaning the better individual investors feel about the market, if you work on that fundamental, the more risk there is in the market for investing into those investments. So if investors are feeling very, very good about tech and very good about healthcare, if you follow that contrarian indicator, then that means that there might be a little bit more risk, especially if you see consumer sentiment go up at a rate that we haven't seen in 30 plus years. It's a pretty singular event. It's going into market highs. You just have to make sure that the things that you're purchasing in the market aren't consistently overvalued.
I'm so glad this is what you're talking about, because that brings me to our next question, right? Which is the Dow's also hitting a recent new high. So this is when we all want to jump into the market, but doesn't that also signal, again, as you said, the point of maximum financial risk, or is there still more room for the rally to run?
Well, I think it depends on how you invest, and I guess what actions you take when you are investing. So we are kind of experiencing that point of euphoria right now, where a lot of people are wanting to engage in the market, and a lot of people are wanting to take that stock risk. Just because we are at a point of financial risk for stocks doesn't mean that we are at a point of financial risk for everything. So that does open the door a little bit for some other investment opportunities. Market highs, market euphoria are usually followed by some type of correction, but to try and gauge how deep that correction could be, especially when the Fed has been so aggressive to prop up the economy and prop up the market, I think it's really difficult to predict very severe market events, barring, a World War III or some unforeseen circumstance.
So I'd like you to get out your crystal ball now and tell us what other risks or opportunities you see ahead in 2024.
Yeah, 2024. I mean, the big risk obviously is just investing around the election. Like, should you need money in your portfolio at the end of this year, you would be selling in a pretty volatile market. So no matter what happens during the election, usually it just creates a pretty up and down situation towards the end of the year. So just kind of plan around that. A lot of people that were rebalancing portfolios this spring, we're just taking a 1 to 1.5 year outlook with people's money and just trying to get through this volatility in 2024. And then another thing that we're looking at is maybe getting back into some bond holdings that have been unattractive the past couple years, because the Fed is planning to lower rates at some point soon. If you can scoop up high quality bonds now during a time that you expect the Fed to lower rates, it can oftentimes appreciate in value in the near term. So we're seeing that maybe as an opportunity this year when you're rebalancing your portfolio. But again, every situation is different. And really what this means is people need to take a look at the risks that they are willing to take in their own portfolio and how long they are willing to hold on to the investments that they do have, because every situation is different. So 2024 is going to look a little different for everyone.
Mm-hmm. Well, again, you mentioned a lot in here, Nolan, that people should maybe be thinking through right now if they want to talk about rebalancing or whether bonds are a good investment for them right now. How can they reach you to find that out?
So they can call at 616-301-2581 or go to our website, cornerstone-rp.com, and fill out the contact us box at the bottom of the page.
Great. Nolan, thank you.
Thanks, Erin.